Welcome guys, this is Sammy here from MECS in Harborne and this is episode 8 of our property plug. And this is a property related podcast for professionals like my friend here, Mr. Sam Norris.
All right, mate. Good to be here with the lights illuminated.
Yeah, it's here. We still have no chairs. So if you've got any ideas for chairs, you guys just send me a link and I'll look to purchase them. As long as the whole property market doesn't just crash suddenly, which it might. So this is what we're here to talk about.
Yeah, indeed. It's we're gonna try and be as positive as possible. We're just going proper negative.
Honesty. I think let's just tell the truth.
Realism.
How many agents out there are just totally bullshitting people at the moment?
Or are they just bullshitting themselves because they're trying to just try and stay positive when actually if they're realistic they can make a better plan.
I feel like so many agents are just KPI'd on how many can we list this week. So they just go into a house, they value it at 20 grand over asking on like a 2020 price or a 2021 peak price, and then they don't sell it. They sign them up to 6-month contracts. I heard from John Shepherd's recently.
6 months?
6-month contracts.
6 months, that's outrageous.
I don't want to name drop, but we recently called out to a Val, and they've been on with 6 months with
that's incredible.
That agent, and they hadn't sold, which is understandable. Things go wrong, we get that, but they hadn't sold, and it was 6 months. I couldn't believe the amount of time a landlord or vendor is tied into an agent.
That's crazy. I've never had 6 months before.
They asked us to come and value it for sale. I said, look, you're probably not going to get what you want, so we should rent it. And they went back to John Shepherd's to rent it. After getting all the advice from the best agent, they went back. Look,
the best letting agent in Birmingham.
Sometimes I'm too honest, I think. Yeah, that's a hard one.
There we go, okay.
I think sometimes you can be too honest to clients. Sometimes they actually want to hear like positivity, but in reality, in this contracting market, there aren't actually that many positives unless you price it correctly. I don't know what you're finding. You're obviously on the other side. You're dealing with the finance.
We get exactly the same thing. So I've always been really honest with my clients and tell them what actually is possible, what isn't possible from a finance point of view. And I sometimes see it as a bit of a positive, but you're playing a long game. I will go in, I'll tell a client exactly what they can get from a finance point of view, whether it's a bridging loan, development finance, mortgage, whatever it might be. And then you've got some other schmuck that's saying to them, no, actually, you can get this rate instead. They can't. And I'll even say to them, show it to me, and I'll show you why you can't. And I had one recently. Another broker had said you can go with Paragon, and I was like, you can't go with Paragon because of this piece of criteria. Well, he said I can, so I'm going to go with him. Great, try. Failed, but then of course he won the business because then this person said, well, Sam's given me this illustration for this other lender. Could we go with them instead? Yes, we can. You're like, hang on a sec. How am I losing there?
We've got the same stories really. It happens to us as well. With valuations, you go out and you value a property. You're honest to the client. You say, look, it's going to be less. I don't think I can get you this much. Mr. X goes in there, values it at what they have said they want, for example, 300 grand, not 280, and they win the business.
Yeah.
Is that a good model?
Well, yes, it is at the moment, apparently. But I started off working at Foxtons in London years and years and years ago. And my job was so I was training to be a mortgage broker, was to try and book in valuations with the various different offices that I worked in at their head office. And they would always say, you've got to ask, yes, I want to get a valuation done. You say, right, who else is going in? X, Y, Z are going in. When are they going in? This date, this date, this date. Great, we'll book you in at last. So then they can go in and say, what has everyone else valued it for? And they'll go in, 3, 4, 5% more. And that's the easy way of winning the business, because if you're saying to somebody, we can do it for this, and somebody else is saying, we can do it for this and it's less, you're going to try and go for the money because you don't necessarily know which one's telling you the truth, so you just go in for the one that's offering you the most.
Imagine we live in a society where that works. I just don't think that is the good model for our business, because you end up wasting time doing photos, marketing it, advertising it, doing viewings that don't turn to offers. You waste the vendor's time, you waste the people who are viewing his time, and you waste your own time, which is the most valuable. I just don't see how that model works. So many agents do a great job of like listing properties but not selling them. List, overval, either chop it down, pull it down, they get de-instructed, or they rent it. It's not a good model. What's the percentage of conversion rate? In 2008, when the last crisis started hitting, it was a problem then, and then people had to come down. I can see prices coming down in the next 6 months, even sooner. I think.
What's your prediction? What's going to be the bottom out of the market? What kind of percentage decrease do you reckon?
10%.
You reckon 10?
Any more than that
is that year on year from 2022?
That's total for the next 18 months.
Okay. Because we were 3% May to May, year on year, weren't we? So are you talking about in addition to that?
Yeah,
Okay.
I think so.
So I think anything up to 10% is a correction more than anything.
You reckon it'd be more?
I could see 10 as in total, so taking into account that 3, another 7.
Shocking me.
But then the thing is that there's so many regional
Bubbles.
markets.
Yeah.
So it's so hard. This is why I get really frustrated when I see people going, "Oh, the property market is crashing." Well, that's such a generalisation because there are certain areas that I know are still holding values because they're affluent areas or whatever it might be. You know, I live in Solihull, and actually the sales market there seems all right at the moment from what I'm hearing.
With Solihull, by the way, I looked online at like what the main agents are listing. They list a lot more stock over there than we list over here. So around Harborne, Birmingham, Edgbaston areas, the main agents will list between 60 and 90 properties. Over your neck of the woods, Solihull, Shirley, they're listing like 150, 140 properties. So they've got a lot more stock over there.
Yeah, it's crazy, isn't it?
It'd be interesting to know what prices they're achieving and also how long it's taking to sell.
Yeah.
We noticed the quick sales have disappeared. Like 1 week, 2 week sales have gone. Everything's taking a lot longer to sell.
Yeah, which is weird because I'm seeing the opposite, but that's just because of where I am in the market. So our acquisition inquiries have gone up massively in the last 6 weeks, which says to me, because most of our clients are investors and developers, I'm seeing that there is those price drops happening. And I had a client 2 weeks ago came to me and said, I need a bridge on this because we need to complete quickly because the client has been sitting on my offer for over 12 months. He's had 2 other offers come and go. Eventually I'm going to just take yours because I'm coming to the end of my mortgage term in 3 weeks. And I basically need to sell it before then because they won't extend my mortgage because they're saying it's unaffordable. So we got him on a bridge. We did it in 2.5 weeks. But you know, that's the kind of stuff I'm seeing at the moment.
That's very high risk.
Like desperate sales.
Desperate, like I need an extra 50k right now.
Yeah.
Give it to me. How fast can you get 50k for someone?
4 days maybe.
That's pretty good.
Yeah. Depends on a few things, but bridging at the moment, it's the pricing on bridging has not gone up at the same rate as pricing on mortgages. So it's actually got to a point now where in certain circumstances it's actually cheaper to bridge. It's crazy.
So what's bridging now, about 10, 12%?
That one that we did that was 2.5 weeks, all in was probably about 12, yeah.
Including the exit fee.
But don't forget, you only pay for what you use. So when we're comparing that to a mortgage, annualised rate for a mortgage at the moment, let's say it's 6.5. So if that's at 12, but we refinance out on month 4 or 5, because that's what he's planning on doing, then the actual, the cost for comparison is less. So it is quite crazy that
it's not for everyone though, is it, bridging?
It isn't. But the thing is for me is it's all about the end result. Because I always say purchase price is permanent, interest rate is temporary. So what you buy a property for, if you can say, I can buy this off you in 2 weeks, give me a discount and use a bridge to do it, and then you refinance onto a mortgage 6 months down the line, when in theory rates might even end up being cheaper, because I mean we'll come on to that, but I think they're planning on a steep incline, steep decline. 6 months, 10 months down the line, we might be on better rates. They've actually ended up doing themselves a good service there because they've managed to acquire something cheaply. They're renting it out, and they refinance it when the market's a little bit better.
It's just one big gamble.
It is a gamble.
It's just like
literally
a gamble. I'm on a tracker and I'm determined not to go on fixed rate. I want to track the mortgage. I want to see how high it can go and then survive at that rate, and then watch it come down and benefit.
Yeah.
The bank is asking me to lock in for 5 years at a said rate, so I think it's 4.1, which doesn't sound too bad right now.
Yeah.
But in 2 years' time, 4.1 could be double what it could be for me.
I can't imagine it will be, if I'm honest. I think, so going back to what I was saying, I reckon if you'd asked me this 2 months ago, I probably would have said something slightly different to what I'm saying now, but then things are changing on a daily basis. I'm getting the feeling that, and potentially, and I'm not saying it's all political, but because the government and the Bank of England are 2 separate entities, the Bank of England is meant to be completely independent, but we have got a general election coming up next year. The government, it would be really healthy for them to hit their inflation target by the time that the campaign trails start. So if you're thinking about it, are the Bank of England now going, right, we're going to go hard, and it's basically we're going to run up this hill instead of walking up it. We're going to run, it's going to be painful, but it's taking a shorter amount of time. So are we going to do 2-3 months of rate increases, get to 6%, 6.25, maybe even 6.5. I think the market couldn't take 6.5 if you want my honest opinion, but we get it to that point, and by the time we reach 6.5, realistically inflation should be below that point. There's lots coming out that, you know, and we're recording this a week or so before we're going to get the next figures on inflation. 7.5 is being sort of chucked around. If we reach that, that's actually really, really good, because then the base rate will only be 2% below the rate of inflation. That's actually not a bad place for us to be.
Okay.
But are the Monetary Policy Committee then going to go, do you know what, let's keep going on this and let's get it above, because as soon as it's above, inflation should tumble. That's what general economics tells us. We are also being told that supply chain costs are coming down, energy prices are coming down. So going into Q4 of this year, we could be in a much healthier position, but are they going to go hard for a couple of months, make everyone's life difficult for a couple of months, and then reap the benefits? That could be what they are looking to do, but I just wish they'd come out and tell us that. Give us some confidence, and so we know that they've at least got a plan. At the moment, everyone's just guessing, you know, it's weird.
My cynical mind is just going to overdrive right now.
But this is what you're talking about sort of fixing into a 5-year fixed rate. Again, it's changing. Are we going to be looking at, is a 2-year fixed rate right now better than a 5-year fixed rate? Well, if you asked me that again a month ago, I probably would have said, 5-year, go for a 5-year. Now I'm thinking, is a 2-year better? Or where are we going to be in 2 years'
Well,
time?
I like what you said about the election, because they do normally pull strings around the election to try and gain the votes. So essentially, they could start like dropping the interest rates this time next year for the election, which is next year, isn't it?
Exactly.
And then it will benefit me because the increase in interest rate isn't that much compared to what I'd be paying on the fixed rate.
Yeah.
It's a gamble. It's all a gamble. But for me, what we see is the customers and how they're reacting. So we've noticed, like we call it the tap. The tap turned off. People stopped inquiring. Buy-to-let investors are inquiring, but they want deals.
Yeah.
You know, if something's listed at 200k, they're coming in at 180, regardless. That's 10% off, isn't it?
Yeah, yeah.
And that's what they're all trying to predict. I know some high net worth investors who are my clients, and they're all thinking everything they're offering on 10% below, because that's where they're seeing the average will be for across the UK. Rents though are really high, so people still are buying buy-to-let properties because you still can make money if you get the right rent coming in.
Yeah.
And that's still moving, but there's not that many investment properties available, and there's not many houses that vendors are willing to do deals on just yet. I think in the next 3 to 4 months, house prices are going to come down because properties aren't selling like they should be.
Yeah. And there are going to be people out there that can't afford to refinance because the rates have gone up, therefore their affordability is down. I predicted this at Christmas when they were, or whenever it was last year, they brought in this 95% loans value residential mortgages. Then suddenly earlier this year, 100% loans value residential mortgages. I'm saying, what are we doing? Because people are already on 90% or whatever from before, and now in the next 6 months, needing to refinance, the price of their property probably hasn't gone up, or it's come back down to where they bought it, and perhaps they're still on that 90% bracket. The cost has tripled. Now that same lender can't lend them the money again. Well, they could probably do a product transfer, but if they go to a different lender, if they're forced to go to a different lender, then they may not be able to get that money again. So they're either having to put in a large lump sum of cash into paying down their mortgage, which most people aren't going to be able to do at the moment, or they're going to be forced to sit on a standard variable rate that could be, I've seen standard variable rates as high as 10%. And, you know, that's
ridiculous.
That's crazy. So those people are going to be forced to sell their properties because they physically will not be able to pay their mortgage.
Is there enough of them, in your opinion, to bring down house prices?
I can't remember the exact figure, but I think it's something like 5 or 6 million people are going to be coming off their fixed rate in the next 12 months. How many of those people are not going to be able to refinance?
A percentage, 10% maybe?
A decent percentage. So is that then going to be enough to change the market? We're also seeing a lot
change the market.
I'm seeing a lot of landlords selling up. You know, I've actually, on the flip side, I've got three of my clients at the moment that are buying portfolios. Some of them are only small, 5 or 6 properties, but some of them are like 10, 20 properties. And these are being sold at a discount because the landlords that had them before are older, they're in impersonal names, they're not very tax efficient. The mortgage rates have gone up, their rent hasn't necessarily gone up because they haven't been able to evict their tenant and get new tenants in, whatever it might be. And suddenly they're making no money and they're like, you know what, let's just cash out. And they're selling them on the cheap. So are we then, are all of those properties going to other landlords? Probably not. They're just sitting on the market. So we're not just seeing residential owners sell property. We're seeing,
Yep.
and
We've seen that.
and then we're seeing it in the commercial sector as well. Commercial property has just absolutely dropped off a cliff in terms of value. So, there's across the board, it's a tricky market at the moment.
Well, we spoke in November, December last year, and I think the things we discussed and predicted then have actually happened.
Well, it's because we're both really intelligent.
Somehow. But it'd be good to catch up in 6 months again and find out what's happening. But I think I don't want to leave it that negative, but let's just leave it with what you think is going to happen in the next 3 months leading to Christmas. What do you think? And then I'll end it with what I believe is going to happen with house prices. It's all about house prices.
Yeah, all about house. But I'll start with my side of things, rates. I think the Bank of England is going to go hard to try and get inflation down, and I think they'll do that by continually pushing up the rate. Pushing up the rate will lead to higher mortgage rates, which will lead to less buyers in the market, which will push property prices down. The next 3 months, I think, are going to be the worst of it. And hopefully moving in towards the back end of the year into 2024, we'll start seeing some shoots of recovery as we get inflation under control, and then as rates start to improve again and as buyers come back to the market.
That is positive. Love that. I think what's going to happen is the next 3 months is people are going to realise that they can't move house, they can't sell the house for what they think it's worth, and I think there's going to be a natural price drop, not necessarily due to interest rates, due to the fact that people aren't buying any properties and they want deals. The media are compounding it. It's going to continue to be compounded by the media. I think prices will drop down to around Christmas time. That will leave us at the bottom. I reckon it'll sit there for a good 4 or 5 months. Mm-hmm. And I hope next spring, next April, May, we might see improvement. I think it's going to be a bit longer, but in the next 3 months, I believe genuinely house prices are going to come down. I can't see people changing their mind. If interest rates go up in August, it's going to make it even worse. And if it goes up again in October, I think there's another one in October, there we go. We could be at 6.5% then. Like you said, it's not sustainable. That's what's going to happen, in my opinion. And if it does happen, at least the rental market will be solid, because I think people who can't sell will rent their properties out, because some people cannot suffer a 15 or 10% drop from what they think it's worth. So they'll just rent their property and move cities if they have to move, whatever they've got to do. But it's not looking good, but you can still sell, by the way. You just got to be realistic. Mm-hmm. And too many agents are unrealistic, and they make our job so hard. But it's now July, and we'll see what happens in the next 3 months. You can come back on.
Yeah.
Might have chairs by then.
Might have chairs. Well, we have got chairs. They're just not the chairs you want.
I mean, fancy chairs where you can sit back and you feel privileged.
I do feel. I always feel privileged when I'm here, mate.
Thank you. Well, thanks for coming on, mate. Cheers.
Always a pleasure.